2025. For those of you who are just joining us, good morning. Good morning. All well, Dabiri Chuku, Yodun, Gabriel, Amit, Imolere, Oladele, Esther, Madam Onaji, good morning. Victory, Onotevuko. Pardon me if I didn't pronounce it well. Good morning to everyone. And we're starting our analysis now, so let's get started. So this week, there are a lot of fundamental events, coming up in the market this week. Starting from today, Monday, there will be about 4 events from Canada. That's the Canadian CPI, monthly, median CPI yearly, trim CPI yearly, and the common CPI, all taking place by 2:30 p.m. today. Simultaneously, Empire State Manufacturing Index from US will also hold same time, but the key event is actually that from Canada by 2:30 p.m. And I'll show you the instrument I'm looking out for that could react to these news events. And tomorrow, I'll just mention the key events for the week to prepare our minds ahead. 8 a.m. tomorrow morning, Tuesday, there will be claimant count charge and average earning index from the United Kingdom. Take note, these two combined could really move the markets. Then we have all the French and German flash manufacturing PMIs, which could really impact upon the euro. But then tomorrow, my key instrument actually is still the pound. 8 a.m. claimant count charge and claimant count change and French flash manufacturing PMI, and also French flash manufacturing PMI and flash services PMI by 10:30 p.m. These two combined could move the pound. And later tomorrow by 2 p.m. In fact, tomorrow, let me just say the key event tomorrow I'm looking at most for will be the news from United States, not even the United Kingdom. The average hourly earning from United States, non-farm employment change, and unemployment rate. Tomorrow is NFP from US. Now, other events will run simultaneously. That's the core retail sales and retail sales will run simultaneously. Now, tomorrow I'll explain it further to us, the implication of having all this additional, the core retail sales added with NFP. But then for now, let's just take it. We're expecting a lot of volatility on the dollar tomorrow for NFP. Like I've been announcing since last week, please make sure that you join us for trading, for this live trading by at 2:15 p.m. The news will be released by 2:30, but we're going to be live by 2:15 p.m. For those who are new to forex trading, NFP is the biggest news event in the forex market every month. The data comes usually the first Friday of the month, but in the last couple of months, America's government has been under a shutdown, so it didn't hold on the designated date. It held eventually after 2 months, the third week of the month of November, and that's why we're having the one for December, tomorrow, which is like second week. Maybe as we approach the new year, it will be adjusted back to the earlier time it holds, which is usually the first week. On Wednesday, the key event on Wednesday will be the CPI from the United Kingdom. CPI by 8 a.m. And that's the key event on Wednesday. On Thursday, the key event on Thursday will be the monetary policy summary, MPC official bank rate, which is interest rate, and official bank rate for United Kingdom again. That's the key event for Thursday. And also on that Thursday, CPI from US and unemployment claims, Philly Fed manufacturing index are events to watch out for on Thursday from both the United Kingdom and United States, And finally, on Friday, the key event to watch out for on Friday are going to have the Bank of Japan retail sales. Now, the JPY events is tentative, but usually JPY events do come up in the middle of the night Nigerian time. So there's a possibility we might still be sleeping in Nigeria when that will be released. So that's why I'm not giving attention to it. But retail sales on Friday, there's a likelihood this will move the market by 8 a.m. Other events from Canada, like core retail sales, existing home sales. Okay, core retail and retail sales combined, even though they are both medium impact, but combined, could actually give some volatility on the Canadian dollar. And later on Friday by 4 p.m., existing home sales and revised UOM consumer index combined together could give some volatility on the dollar. So let's take note of these events as I mentioned them, and we may, if you are the type that knows how to trade fundamentals, you could make some pips trading these events that I've mentioned. All right, so for today, like I said, we're expecting about four events from Canada, today, Monday. So let's check out the instrument that might react to this news event from Canada, the CPI from Canada today. So I'll flip over to the chart for us to check out this. Good morning, Madam Monaji. So I'm switching over now to the chart, and I'll be looking at both the AUD card and the card CHF, but I'll start with the AUD card. Now, AUD card is an instrument I've looked forward to in the last, since last week thereabout, and that's largely because of this formation of the head and shoulder pattern, which eventually, has taken shape, just like I looked at it. I think that was early last week or so. Now, it didn't really form well the whole of the week, but as we approach Friday and early this morning, we've seen it form very clearly. And the main analysis that resulted into that, I'll quickly do that. All right, so this is the AUD card on the weekly time frame. We can see that price, is trending downwards, making a series of lower highs on the weekly time frame. On the weekly time frame, and 2 weeks ago, the market closed as a rejection candle. And you can see there is this resistance zone where price has been ranging around for many weeks now. So we have a trend line, price trending downwards on the weekly with a resistance, a rejection candle. Technically, the overall movement is expected to be a bearish one. All right. And last week also, the market still closed as a red rejection candle again on that resistance zone. So this week, we're expecting the further bearish movement on the AUD card. So down to the 4 hour, okay, let me check the daily. We've established a bearish trend on the weekly. Nothing much on the daily. On the 4 hour, we can see the pattern evolved now into a head and shoulder pattern, and price has clearly broken out below the neckline. All right. So with that, if the data this afternoon from Canada comes out good for the Canadian dollar, that will lead to a further bearish movement on the AUD card. So if you want to trade the card news this afternoon, just watch out for the AUD card, because of this analysis I've done. If the data comes out good. Now, why will I say sell AUD card if the data comes out good for the card? Because for the AUD card, the Canadian dollar there is the quote currency. So it will only sell if the data comes out good, that is actual greater than forecast for the Canadian dollar. Now, if that looks a bit complex to you, this is actually my grade A probability trade. I always tell you I look out for a high level of probability on my setup. But for some of us that are new to trading, it's maybe a bit difficult to say, okay, if it comes out good, sell. If many of us want to do, if it comes out good, buy, which is a bit easier for some of us. Now, my grade A setup is that AED card, but the grade B is actually the card CHF. All right, for the card CHF, price recently, broke out from a resistance zone. Price broke out from a resistance zone and retested it as a support, and technically we're expecting further bullish continuation. So if the data comes out good for the Canadian dollar, you may buy the card CHF. So you can either buy the card CHF or sell the AED card. But for me, the AED card actually has more probability, of selling for that. But then you're at liberty to choose whichever one works for you. So you can either buy the card CHF or sell the AED card. Now, if you're buying the card CHF, price may target the next resistance level, which is on 42 pips away. Let me go down to a lower time frame, like 1 hour. All right. So we have a small resistance zone here. So if the data comes out good, price is expected to break this resistance zone and possibly target the next, major resistance up there. And the distance is roughly about, let me do it again, roughly about 36 to 40 pips. So I'll just advise maybe some 10, 15 or 20 pips, because we don't know how volatile it could really be, but between some 10, 20 pips should just be okay to catch on the CAD CHF if the data comes out good for the Canadian dollar. So on the other hand, also, if you are selling the AUD card, now, what I would advise not to do is to buy card CHF and sell AED card. Don't do that. Just pick one. Just pick one out of the two. Let me go to AED card. So if you're selling the AED card, there's a likelihood of AED card trying to target the next major support zone, which is this region here, and that is some 80 pips away. Now it's not going to move that distance in just one candle. I mean, it could take some time. So, but then overall, that is what is expected. So we're expecting a drop, to this support zone. Now it may take the entire week because this is a swing setup, but that's the direction of the market. So you may look at saying this one is looking like close to some 80 pips. You may target some 30, 40 pips on it as it drops. And if you want to wait the entire period, well, it's over to you. But I can guarantee you it may not happen just within a day. It may take some time before it happens. So we're bullish on the card CHF and we're bearish on the AED card. And for emphasis again, like I said, don't trade the two together. Just pick one out of the two. For me, I may go with the AED card because it actually has more room for movement compared to the card CHF. All right, so that's my view for the news on from Canada this afternoon. Now, I'll just quickly show some few technical setup which I was able to spot this morning. Now, please, I want us to know that once we enter the middle of the month of December like this, the volatility in the forex markets usually begins to drop. So it's possible not to see much movement in the market going forward from today. Now, take note, I'm not saying don't trade at all. I'm just saying that volatility will most likely reduce. That's what happens and may return eventually by the middle of January in 2026. Again, I'm not saying don't trade, but we may not have much liquidity in the market. So I'm looking this morning now at Euro USD and gold. These are the two currency pairs I can find a tradable setup as we speak. So I just want to quickly show us what I found on these two instruments. All right. Now for Euro USD, the market closed last week with price, closing as in ending the day close to a resistance zone on the daily time frame. So technically, it's not a rejection kind of the daily, but notwithstanding, it's still very valid that we have price, ending off for the day close to the resistance zone. On the 1 hour, we're having a kind of a reversal pattern taking shape at the moment as an inverse head and shoulder pattern, which is expected to lead to a drop. However, at the moment, price ranged around the trend line. So we're going to wait for a new candle to break out below this ranging zone, this range zone. All right. So once a new candle breaks out below this range zone, then we're going to see a bearish movement on the Euro USD. And using my Fibonacci tool, you may just target Fibonacci 38.2 can give you as much as about 15 pips. Fibonacci 50 can give you as much as about 30 pips. And Fibonacci 61.8 can give you as much as about, let's say, 45 pips thereabout. So we have a move between 15 to 45 pips on Euro USD. We are selling once price is able to make a clean break below the range zone. We're bearish on the Euro USD. All right. And the next is going to be the card CHF. Right, so pardon me, did I say CHF? Gold rather. Gold is the second instrument I'm looking at for today. All right, so this is gold on the 1 hour time frame. So we start our top down from the higher time frame, which is the daily time frame. Now, on the daily time frame, price is approaching the resistance level, very close to the resistance, very close to the resistance on the daily time frame. And yeah, but it's currently testing the resistance on 1 hour. So it's in between the resistance on the daily and the 1 hour. Both of them could work. We could experience a reversal upon price hitting, any of these two levels. It's testing the 1 hour already. It's testing the 1 hour resistance already. So in essence, we could expect a reversal from here straight away, or price may still jump up to hit the daily, and we still expect reversal. If any of the two could work. Now, if the 1 hour is going to work, it's not really looking too clear. This may want to look like a double top, but it's not as clear as I'm expecting. So I would not want to go that route. I just want to go down to 15 minutes time frame and see if we can capture any reversal from 15 minutes. All right, so this is the 15 minutes time frame. We can see we have a rising wedge pattern. So like I said earlier, price could either reverse from here or could go up before breaking out downwards. However it goes, we're bearish on gold. RSI is currently above 50, MACD is above 0. RSI is above 70, pardon me. MACD is above 0. So you want to wait for your RSI to clearly cross below 50 and possibly your MACD cross below 0, before you take a sell on gold. So we're bearish on gold on the 15 minutes time frame. All right, that will be the end of my analysis this morning. I'm not seeing any clear setup on other instruments, so there's no point, checking on them. But if in the course of the day we get to see uh clarity on other instruments, we'll definitely let you know. All right, that will be the end of the analysis this morning. Do trade safe and have a great week ahead. Bye bye. You're welcome, Mr.
Thank you
Gabriel.
very much, sir. We
You're
are
welcome.